Yo guys, welcome back to my YouTube channel, or welcome if you've never been here before. So I've just jumped on this morning to do my weekly forecast for the week commencing the 10th of January and ending on the 14th of January. But before I get started with the actual forecast, I just want to draw your guys' attention to the written version of this forecast, which I provide every week. So this written version of the forecast will be in the video description. So if you guys just want to check out the written version, then you can click the link in the video description. This written forecast has pretty much all the information that I'm going to talk about, maybe in a bit less detail, but you guys can look at this forecast, you can print it off, compare it with your own forecast. So if you want a written reference of this video forecast, then just check the link in the description and it'll bring you over to this Notion document here. Alright, so let's get started with this week's forecast. So the first pair I'm going to be looking at today is the New Zealand dollar US dollar. So looking at the daily time frame, we had the break of structure to the low, we then had the second break of structure to the low, and just like last week, we've now got this first break of structure to the high. So just looking at this last break of structure, we can see that the market's broke structure to the high, which is signaling a bullish intent. So to me, this last break of structure here to the high signals that from this daily perspective, the market is going to start going higher. And like I spoke about last week, from a daily perspective, we do have this order block up here, which has imbalance here, and there's also imbalance there. So looking at the imbalance, it also makes sense for price to go higher. So from a daily perspective, we're expecting price to go higher. But the question is, where is it going to start going higher from? So for me, the daily order block which caused this breaker structure is where we want to be looking at buying out of. So looking at the daily order block which caused this last bullish breaker structure, we've got this bearish candle here. So that sell candle is technically the daily point of interest, the daily order block which caused that whole move. So for me, I'd expect buys to come from anywhere within this sell candle. So what we can see now is that at the end of last week on Friday, we've reacted from this sell candle, we've reacted from the daily point of interest. So from that perspective, at this moment in time, I think we could just see price start to buy up to follow through with this bullish intent. But with that said, I'm going to zoom into the lower time frames because for me, I do think that we've got some pretty good reasons to retrace deeper into this daily point of interest, this daily order block, and come further down into this area before we do actually move up. Alright, so firstly, and what I want to talk about is within that whole daily point of interest on the within that whole point of interest on the daily, if we're looking at the refinement of it, what we've actually got here is this imbalance. So we've got that imbalance there, and then further down we've got our more refined point of interest. So what we can see is that we still haven't filled that imbalance, so this imbalance is still there. And what we've also got here is this wick at the low, this wick which grabs liquidity from these lows here. So for me personally, before expecting that buy, I'd rather see this imbalance filled, and I'd rather see price come into this area here, either within this candle or within this wick lower down. So for me, that's what I'd like to see on the daily, and I think that before we do go higher, it will make sense for us to come and fully fill this imbalance and mitigate the orders down here from an institutional perspective. So in terms of the daily thesis for going higher, personally, I'd like to see that actual move that goes on to break structure. I'd like to see it come out of this refined area down here. But with that said, since we have tapped the open from the daily perspective, we can just keep going upwards now. But for me, I'd rather see it come back down there. So Considering all that and looking at the 4 hour structure, what we can see is we had this 4 hour high here and then this 4 hour low. So we had a 4 hour break of structure at the start of last week. That's left behind this point of interest here. Price has returned back to that point of interest to mitigate, and then it's broken structure again. So for me, we've now had essentially a structural trend transition on the 4 hour. So we've had 2 consecutive breaks of structure, and we've also got this mitigation here. So what we've actually got, as well as the structural transition, is the order flow transition, and we do have this bearish order flow invalidation point. So for me, until we break past this order flow invalidation here, then from a 4 hour perspective, we're still bearish. So whilst we do have that overall situation on the daily, I do think from a 4 hour perspective, we're still bearish. And like I say, I think we've still got a reason to come further down on the daily as well. So for me, going into the start of next week, I'm going to be following this 4 hour bearish thesis, and then when we do break this structure, take out the liquidity below here and tap into that daily POI, then I'll start to look at that bullish thesis on the daily. So looking at this 4 hour and anticipating sells to continue from this 4 hour structure, it's really for me a case of which area caused this second break of structure. So now what we've got is we've got our order flow invalidation point of interest up here, which also has imbalance. So definitely I think that the highest confluence area to look for sells on Nzdusd is going to be this area. And personally, I think that that's a pretty high probability opportunity selling out of this zone up here. Now, I have marked this one on as well because it is possible that we'll just see price come into this area and then break structure again to then mitigate in that daily area. And then if that happens, so if we basically get another break of structure before we come back up here, then I'll be expecting the daily thesis to start playing out, and I'll expect that this imbalance will be filled on the way up to break daily structure. But that's why I've marked both on, because considering that I am anticipating that daily break to the high, it wouldn't be too strange really to see it react from here, go down into that area from there, and then we'll see it go up from the daily and just violate this order flow invalidation. But unless we see a significant reaction from this area, then what I'll be looking at is basically just this point of interest up here, which is the order flow invalidation point of interest. So yeah, Nzdusd at the start of the week next week, what I'm going to be anticipating is we're basically going to start moving bullish away from this area here. We'll come up into this point of interest on the 4 hour, which caused the most recent break of structure. Then we'll start to sell off from there. We'll sell off into this daily, refined daily point of interest, fill this imbalance, possibly even come down to the extreme to mitigate an order block within this wick. And then after that, I will be expecting the buys to come in, the buying volume to come into the market, and we'll see hopefully quite an aggressive move upwards, which will essentially, from an institutional perspective, fill all this imbalance and then mitigate orders in this area. And then following on from that, from this area, I would expect some type of reaction for sells. Whether that follows through or not, I'm not really sure. But to be fair, this probably isn't going to be happening this week. So we'll see what happens this week. And then as we start to move up to this area, we can be watching the 4 hour structure to see what's actually happening. Alright, so moving on to Australian dollar, US dollar now. We've got, you know, some parts of the setup is analogous to the Nzdusd setup, but it still does have a relatively different structure. So looking on the daily first, we've still got this daily point of interest, which I've been talking about for a while now, and that daily order block caused this whole impulsive move down here. We're now moving back there correctively, so based on the fact that we've got this impulsive nature here, and now we're in a more corrective nature coming back up here, I am still expecting price to make it back up here eventually, and then when we do get up here, I'll expect to start seeing an aggressive sell-off coming in to follow through with that impulsive nature, with that impulse correction, impulse pattern that we often see in the markets. So from a daily perspective, we're basically just looking at this corrective uptrend until we get to this order block, at which point we'll most likely see order flow transition and structural transition on the lower time frames, and then we can look to sell from there. Now, with all that said, I think it's important that we look at what's going on the 4 hour, and it's the same structure on the 8 hour, and I think it's cleaner on the 8 hour, so I'm going to talk about this on the 8 hour. So looking at what's happened recently within this whole corrective structure here, what we've got is we've had a break of structure to the low on the 8 hour, and then we've had a mitigation up here, and then we've had another break of structure to the low on the 8 hour. Now, since we've got that mitigation there, that gives us a valid order flow invalidation line, which adds a significant amount of confluence to this point of interest here. So based on that, what I'll be expecting is for price to come back up at the start of the week into this 8 hour point of interest, and then we can look to sell off. And with that move, I'll be targeting the liquidity at the low of the 8 hour range. So going into the start of next week, it's pretty simple what I'm looking at really, and it's basically to capitalize on sell positions from here and then targeting liquidity at the low of the range. So just looking at the 4 hour, what we can see is we do actually have a much more accurate refinement that we can look to trade away from, and that is actually where the imbalance starts as well. So for me, I'd probably expect price to just retrace all the way up here. I mean, it's only 60 pips, so it could happen even in just on Monday this, and then we'll see the sales start to come in out of this order block here, and then we can see the sales coming to target this liquidity. Considering what is actually happening more on the higher time frame, like I do still think price is going to come back to this daily point of interest before we see the daily low broken. So while I am expecting this move to happen, and then I'm expecting price to come down at least to this liquidity here, at that point I think it would make sense for us to see a bullish reversal on the lower time frames, and then we'll get a move which will bring us back up to this daily point of interest. But in terms of what I'm actually looking at for trading opportunities going into next week on Aussie dollar, I will just be looking at selling out of this point of interest here, because that's a super clean order block. It's also a high probability situation because of this order flow invalidation line. So that's AU for this week. Alright, so euro dollar. So it's a bit messy, so I'll just hide my 4 hour drawings before I start talking. Alright, so on the daily now, just like last week, what we've got break structure to the high here, and then technically speaking, this whole bearish candle here is the order block which caused that break of structure to the high. But considering how big that is, I do think there's a couple of refinements which I'll talk about shortly, which we can make on that overall candle. But yeah, from a daily perspective, what I'm looking at is we've had a break of structure which shows that the market could go bullish now. So I'm expecting price to continue bullish. So essentially looking at something like this. So we've got a break structure, retracement, and then we'll break structure again. And for me, I think it makes sense if price comes up to this area here, because we've got lots and lots of imbalance, and that is also an order block which broke structure. So for me, this area needs to be mitigated from the institutional perspective. We also need to fill this imbalance, and that's why I believe that the most probable outcome for this pair is that we are going to see that next break of structure on the daily before we see another break to the low on the daily. Now, that said, I think looking at the 4 hour makes more sense. So looking at the 4 hour, initially I'll just talk quickly about the refinements of that daily POI. So like I mentioned, we have this pretty much whole area here is the daily order block. But when we look at what we can actually refine the daily order block to, for me there's two clear areas. So we've got this wick trick refinement here, and what that basically is where you've got this wick here is longer than the previous wick, which means it grabbed liquidity from it. So for me, I think it could make sense for price to come into this area and then just start moving away from that. So that's basically a refinement of that daily point of interest for buys, and I do think that this area is worth being aware of because that could be a very accurate opportunity potentially for a small stop loss for price to move away from. Now, failing that, and if we do see a violation of that area, I'll expect price to come somewhere between this wick and the bottom of this candle, and I'll expect price to react from there and then start going bullish. So for me, before we do see that next break of structure on the daily coming through, I'd expect either this area to be tapped into or this area to be tapped into. So with that said, and looking at the 4-hour structure of a minute, I do think that we've got a couple of selling opportunities to capitalize on that shorter term sell move to take us back down into those areas. So looking at the 4-hour now, what we've got is we broke structure to the low here. Now that break of structure, it came from there, so that's why this is a point of interest. But in terms of where the actual move originated from, it originated from this candle up here, so that's why they're both valid points of interest in terms of the sell move, which will take us down there. So for me, going into the start of next week, I'll be open to price selling away from either this area or this area. So if we do just start to see the order flow transition on the lower time frames from this area, then I'll be looking for entries to then capitalize on this range back down into this daily point of interest here. But if we do just violate this area, then I'll delete this point of interest and I'll be looking at sells away from this high point of interest. And hopefully if we do get into there, then we will see that order flow transition on the lower time frame, and then we can look to capitalize on the range from this point of interest down to this one here, which is just over 100 pips. So definitely for intraday setups, that's going to be a really nice range to capitalize on. But then so yeah, basically once we get that sell move coming through, we'll get to the bottom of this range. Now what we've got here is relative equal lows, which means that there's going to be liquidity below these lows here. So what I'm expecting is if we do sell off from one of these areas, we can target that liquidity there. So we'll basically see price coming down to take out that liquidity. And then once we've taken that liquidity, I think it's fair game for us to then start going up to then break structure again on the daily. So that's another thing about this little wick trick refinement here. It's got that liquidity confluence. So if you think about it, as soon as the market comes back under this equal lows here, then all the stops, which are going to be sell stops, are going to be liquidated. So that means that the banks and the institutions are going to have to absorb all those orders and take the other side of them, which means that the institutions will accumulate buys as soon as they take out this liquidity, and they'll have more buys in their order book. So that's another confluence for this little wick trick refinement here. But yeah, once we take out this liquidity, I'm expecting buys to either come from there, or if we don't respect this area, then I'll wait until we tap into this extreme, and then I really will be expecting buys to come out of this extreme. I'd be pretty surprised with the current market structure if we did actually see this extreme violated. We may get a liquidity grab below it, but for me, I'm expecting that this area will be respected, and then we will buy up so that we can fill all this imbalance up here and mitigate that order block up there. So yeah, but that's EU for me this week. I hope I was clear enough for you guys. And like I say, you can always check out the written version of the analysis if there's something that you don't understand from this video version, or feel free to leave a comment if you've got any questions. Alright, so moving on. And guys, please, if you enjoy these videos, please do subscribe to the channel, because I do put a lot of effort in every weekend pretty much to get these videos out for you guys, and especially to do the written version of the analysis. So if you guys enjoy videos, then please do subscribe, and please do check out the written version of the analysis as well, because there's a lot of information in there, and it's just a more accurate reference point, so you don't have to remember everything that I've said off the top of your head. So yeah, it's definitely worth checking out. But if you guys enjoy these videos, please do subscribe to the channel. Alright, so looking at GU, so GU is not really as clean as those previous pairs. So we had a break structure here caused by this order block. Then we've got a second break structure which was caused by this order block. And now we violated this order block for sells, breaking structure to the high and showing a bullish intent. So that basically signals that price now is potentially looking to go higher overall. And what we could see on the daily is just basically price will retrace and then we'll break structure again on the daily. And in terms of following this break of structure, I think that's what makes sense. That said though, previous to that we did have 2 consecutive breaks of structure, so technically the trend is still bearish and we've not actually seen a trend transition yet. We've just seen that bullish intent which broke above this area here. So considering that this area here is still valid, for me that order block, that point of interest, is a valid supply zone. So I'm going to be expecting some type of bearishness to be coming out of this area, even if it doesn't follow all the way through to the lows. I'm definitely going to expect some type of order flow transition on the hourly time frames coming out of this supply area here. So with that said, and looking at the 4 hour, we are still actually in a bullish trend on the 4 hour. Now if we look here, we've got this impulsive movement, and then it sort of started to decelerate and we're getting mitigation after mitigation. So for me, this is unhealthy order flow, and I think it's a pretty poor situation to be buying into. Like for me, this is slowing down and then getting ready for some type of reversal, and then it'll take out all the liquidity below the trend line there. But so yeah, for me, that's what I'm really expecting, is for this supply area here, for the order flow transition to come from there, and then we'll take out all the liquidity below these lows. But in terms of the actual 4 hour, we are in a bullish market structure, and yeah, the range is from this high here to this low here. So from technically, it is going to be valid to basically look for buys out of this area, and then look for it to break structure again, and then this supply area will just basically be a reaction point which will take us down to this 4 hour point of interest, and then we can look to buy out of there. So I will forecast that this is a valid opportunity, and especially in terms of a reaction point, I think we will probably see some type of reaction from down here, even if we are going to go further down. But like I say, for me, this is not the best opportunity, so I'm not really too interested in it. If I was looking to buy on the pound dollar, what I'd prefer to see is another break of structure, and then we can look to buy following that break of structure, because at that point we will have invalidated this supply zone, so that bearish thesis will hold less weight in my mind. But yeah, so really on pound dollar, what I'm expecting is the sells to come out of this daily point of interest here, and then when we get down here to the buys, I'd be surprised if it does get respected, but we'll see what happens, and it definitely could do. Now what is worth noting more is that on the hourly we have actually started to have potentially this structural transition. So we've had our first break of structure to the low, and that's come out of this very clear order block here, which has imbalance and caused that whole move very clearly. So for me, we could potentially be in a pretty nice sell setup for Monday. So on Monday, I'll definitely be interested in what happens with the lower time frame price action, because if we start to see that lower time frame order flow and the order flow transition on the lower time frames coming out of this area, then I'll be more than happy to sell it down using the intraday structures. But yeah, let's see what happens. But for me, the first thing that's going to happen is going to be this sell move, and then we can take it from there once we get into this area here, which is the 4-hour POI. Alright, so let's move over to Euro Pound now. Alright, so Euro Pound, looking at the 2-day, which is what I've been talking about for the last few weeks, I do think it's just a little bit clearer in the daily time frame. We had break structure, mitigation, we then had another break structure. As I was speaking about for a few weeks, we followed this order flow away from this point of interest, and we have now fully completed that move and reached the target. Now, if you guys saw last week's forecast, we were on this bullish candle here. We've not actually seen the break of structure below the low, so this order block wasn't validated yet. But now we have seen that actual break of structure, so this break of structure now is in play, and that means that our current range on the daily and on the 2-day is from this high here to this low down here. So looking at that, it's literally just a case of looking to follow this bearish structure on the daily, and for me we're going to come back up here, so we're going to retrace this area and then we'll be selling out of this area here. And then just looking at the 4-hour, for me, I'm not really interested in sells from these lower areas because I do think we're going to see the retracement on the high time frame. So with Euro Pound, I'm happy to just wait for that and then potentially do counter trend if we see that order flow transition coming in. But in terms of this overall 2-day order block, looking at the 4-hour, I think we've got two clear refinements. I think we've got this area here, which is the buy before the sell, which broke structure and it was very impulsive. So I won't be surprised if we just retrace up into here, which is essentially the open of the 2-day order block, and then we'll start selling away from there. Failing that, and if we do break through that area, then I'd anticipate most likely we're going to see price come right up to the extreme and mitigate an order block that's within that wick there, and then we'll move away from that. And yeah, that's what I'm really expecting on Euro Pound. And for me, I think this again is a really quite a high probability situation just because we've got this order flow. So yeah, I mean, I've not put it on there, but this is the order flow invalidation line because we have the mitigation there. We've got efficient pricing here, and then so that's essentially where order flow will be violated. If we go above there, then this whole bearish order flow will be finished. But if we don't, then for me, it just makes sense to continue bearish order flow. And just looking at the weekly, what we've got is lots and lots of liquidity built up here. So we've basically got equal lows here. And if you think how long this equal lows have been getting built up for, they've literally been building, like from the institutions have been building these equal lows up for years now. Like yeah, literally since 2016. So we're talking 5 years they've been building this liquidity here. So looking at that order flow on the daily time frames, for me, like it just makes sense that we're going to come and take out all this liquidity here. Like from an institutional perspective, if they brought it all the way back down here and they're in bearish order flow, it doesn't make sense to me why they won't come for this liquidity before they reverse, if they are looking to reverse. And further to that, what we've got is this order block down here. So in the weekly time frame, we've literally got a massive amount of liquidity under these equal lows, and then we've got this massive order block here. So really, I think it does make sense for us to come down, like at least to take out the liquidity for another 100 pips, but hopefully to mitigate this order block as well for 300 or 400 pips. And then once we've mitigated that, that's when I'd expect some type of bullish price action to come into the market. But that's a weekly, and for me, what's most relevant is the daily time frames because that's what we're following right now. And in terms of these daily time frames, I'm expecting price to retrace back here and then start to sell off out of this point of interest following bearish order flow. So finally is pound yen. So pound yen, it's not really much change from last week. We've got this break of structure on the high. So following that, I'm expecting further bullish price action on the daily. But before we see that extra bullish price action, I'm expecting a retracement into one of these order blocks which calls for break of structure. So for me, either this area here, or this extreme point of interest here, all three of them are valid order blocks which could be considered as the order blocks which broke structure. So once price gets back down into these areas, I'll be looking for buys on pound yen. But right now, we're still, even from the closest one, 150 pips away. So I'd be surprised if they come into play this week. And I think on pound yen right now, what's important to focus on is the 4-hour structure. So what we had was we had a break of structure, but it's now gone to, it's now broken structure again to the low. So what this essentially becomes is a liquidity grab. So that liquidity grab there adds confluence to this point of interest. So we've got a liquidity grab at the high, which basically traps buyers. Then we've got a break structure to the low, and now we're just retracing back up to this area, and then we can look to sell off from this area, and we can look to target really this order block here as a first point where it could potentially start going up again. What we've also got is liquidity below these lows. So looking at the liquidity below there, I think it really makes sense that once we do start to see this sell off, then we're going to at least come to take out that liquidity. Another confluence for this order block here is that we've essentially got this impulse correction impulse playing out, because if we look, this impulsive move only lasted for 16 hours, and already now we've been retracing for 3 days. So really it's going to be probably 4 days or more by the time we do actually get up there. And for me, that adds quite a bit of confluence because we've got the momentum on our side in terms of sells. So we've got the impulse, correction, impulse, and that adds a lot of confluence along with the liquidity grab to this order block on pound yen. So yeah, pound yen, I'm really liking this setup. I'll be looking to sell out of this area going into next week, and that's pretty much all I'm focused on pound yen. And then when we do get down here, I'll see how price is reacting. So guys, I hope you've enjoyed this forecast today, and if you have enjoyed it, please do subscribe to the channel because I do put effort into these videos every week, and I'm super grateful for all my subscribers. So if you guys subscribe, I'll be super grateful for that. And remember guys, if you do want to check out the written version, then it'll be linked in the description, and I've also got a lot of different resources linked in my description relating to trading if you guys are new to trading or want to learn more about trading. So guys, thank you very much for watching, and I hope you guys all have a great trading day. A great trading week and a safe trading week. So cheers guys, have a good week and follow your trading plans.